So let me post that 45 here to say that 45, I'll come and say minus 45, which I can't recover. So the debit, I'll deal with it when I complete my double entry, when I go to the other reserves. So that means that at the end of the year, my net pension asset, which I'm taking to the balance sheet under current assets. Remember, yesterday I told you that net pension assets are recognized in current assets, while net pension obligations are recognized in non-current liabilities. My net pension asset at the year end, 31st October 2022, is the difference between the 151, which I had expected, minus the impairment of 5. So that asset, I can only get 106. So I can only get 106, which I'm going to present in the current assets. So all this time round, I'm looking for that 106. And I want to take it to the current assets. Current assets, so kept leaving lines in there. So one of the lines here, I'll say defined the net, pension asset, which is coming from my working 7 and my not 7. And I have a 106. 106. I can put it here actually. 106.
But in financial statement, there is other defined net asset of 244.
Of what?
There is a defined net asset.
Okay.
Which
where can it be? Just help me say in current assets or non-current assets so that I look for it faster.
Current asset.
Okay. In current assets.
In the question, it didn't.
The question itself. Okay, let me see. In current assets. Oh, it's here. Oh, we skipped to. But that 244 has not taken care of these adjustments. Okay, so let's put it the way. If we had seen it, I think we've got it. We skipped it. Let's say if we had gotten it and it was 244 here. 244. Okay, so that 244, we are coming in to say that 244 has in our working. Let's go to working 7 to see where the 244 may have come from. Here, this sits here. They have it. We have it. We have also gotten it. So that is the book carrying amount. The book carrying amount, that's the 244. Now, for us, that 244, we are reducing it now by 93 to say that by that time, they had not taken it to the remeasurement amount of 93. So we're taking a sort of 151. We are going to take off 43, sorry, 93 and 45. So we still get the same. So let's go by theirs. So the 244 is what we the book carrying amount. Now that book carrying amount, I'll come back up here to say 244 in the balance. We'll say 244 now minus 93. 93, which is the remeasurement, the net remeasurement loss. Net remeasurement loss. Okay, then also minus the 45, which is the asset ceiling impairment. Asset ceiling impairment adjustment. All these are in working 7. Therefore, as a result of not number 7. So it will still give you the same figure. So it's okay. You picked it correctly. So this eventually gives me 106. So 244 minus 93 minus 45, you should be getting that 106. I hope you've seen it. Okay. Good that you had seen that. I think in the rush, we forgot to spot that out. That 244 was already there, but we've also confirmed it in our table. Okay. Now, in that same table, there are corresponding entries we've not yet posted. Starting with the past service cost, I will go to the consolidated retained earnings and put the 202 a debit. So remember, I have working 2, which is the consolidated retained earnings. Working 2 is here. I'll come in here to say that I have the net effect of the Rafiki's defined benefit pension, which is coming from note 7 and working 7. Yeah, the first thing I have there is a past service cost. A past service cost, which is 202. 202 past service cost. Okay, past service cost. Use this line to deal with all those that go to the P&L. So I mean that I have posted there 202. A debit is going to be an expense. Now there's another, which is the current service cost, 252. So it's going to increase the expense. So 202 now plus 202 plus 252, which is the current service cost. The current service cost. So I've also posted that. Then the next posting is, so this is done. Then the other is the net interest income of 5. Net interest income reduces the expenses. So I'll go to that working and say minus the net interest income. Minus the net interest income, which is 5. Net interest income. Okay, you're crediting or reducing the expenses that you've so far put there by 5. That's the other highlighted yellow, which I had not done. Three. Which is the net remeasurement gain, the net remeasurement loss, the net remeasurement loss on the pension scheme. Okay, in working 7. Stroke note 7. So the debit is a minus, it reduces the reserves. So that one we've also posted it because we had not posted that corresponding entry. Then the last corresponding entry is the asset ceiling adjustment, a debit again in the other reserves of 45. So I'll go back to the other, to the revaluation reserves and have another figure, which is a minus 45. Minus 45, which is again an asset ceiling adjustment. Asset ceiling adjustment on the pension scheme in working 7, stroke note 7. So we've finished also the corresponding entries then. So we've finished the corresponding entries. So that note and that working is fully done. So that note, you've seen that you have done all the 7 things. So you have all the 7 things. So all the 7 changes are there, or transactions that we talked about yesterday are all there. We have them, all of them in this case. Okay, so if I go back, I know I've run out of time, but if I go back to my notes, I'm done with note 7. The only note that is left is note 8. Trade name acquired is intangible asset at 330, and it's carrying amount after 3 years, having amortized. We need to establish it and also compare it with the recoverable amount based on the fact that there's an indicator, since there's a new competitor, there's an indicator that this trade name may be impaired, and the recoverable amount has been given to me as 184. Okay, so I'll complete that with as working number 8. So working 8 is Simba's trade name. Simba's trade name, where I'll first of all get the historical cost. And that cost was way back in November 2018. Okay, This trade name is not number 8. This is not 8. Okay, so and that figure was 330. Then I shall say less the accumulated amortization, the 3 years. Sorry, for the 4 years, less accumulated amortization. That is for the 4 years to 31st October 2022, which is basically mathematically the 330 divided by the 10 years, because the total is 10 years, times the cumulative 4 years. Okay, so on my calculator, 330 divided by 10 years, so that gives me 33. Okay, then times 4. I have 132. So I have 132 million. I'm taking out 132. So that means that the carrying amount at the year end, carrying amount at 31st October 2022 is 330 minus 133. So I have a 198. Yet the recoverable amount has been given to us that we can only recover. This trade name, the recoverable amount, is given on this date. This recoverable amount is the recoverable amount at that year end, 31st 2022, has been given to us as 184. So when the recoverable amount is less than the carrying amount, then in that case, we are basically going to have an impairment loss. So we have an impairment loss, which is the difference between 198 minus 184. So that impairment loss is 14. Okay, and we want to account for that impairment loss by debiting it. We don't have a P&L to prepare, so I'll debit it in the retained earnings account. Okay, while the credit is going to go to the asset itself, the trade name. They had wrongly placed it in the PPE. I'll deal with that later. Okay, so I'll first credit the trade name with 14. Okay, so I will come in to say that in addition, I need to correct the error because they presented all this in PPE. I need to correct error in the presentation where they presented this in the PPE account. So they presented the PPE with the carrying amount. Okay, carrying amounts at the year end. So by 31st October 2022, they had put the 198 in the PPE because they said clearly that the figure they put in PPE had correctly taken care of that accumulated amortization. So that in the PPE is a 198, which we want to adjust out. How do we adjust that out? We shall debit this in the trade name. Trade name is under intangible assets. This should be the column called other intangible assets. The line is called other intangible assets, while the credit is going to take it out of PPE. So I am removing it from PPE. So this is a removal PPE, where it's wrongly placed. And this will be with 198. So this should be with 198 million. So that's the figure I'm taking out because before the payment loss, that net book value was in the PPE, and I want to take it out. So I mean that I have two entries to deal with. One, I need to account for the impairment loss, but secondly, I need to account for the correction of the error in the presentation where they presented this wrongly in the PPE. Okay. So let me start with the correction of the error. So I'll go to my balance sheet under the other intangible assets in the non-current liabilities, so non-current assets, and put the 198 there, which is basically the trade name of Simba. Okay. But we shall also go back and also allocate to the non-control interest because Simba is a subsidiary. This is coming from working 8. While the credit, I'll take it out of the PPE because that's where they've wrong they put it. So I'll come to the PPE line. It's a minus 198, which is that trade name in Simba, which should not be in PPE. Then I account for the impairment loss to say that that impairment loss should be taken off the intangible asset, the 14 million. And this is because this is impairment loss on the trade name in working 8, stroke note 8. So that's the credit. The debit, I take it to the consolidated retained earnings working, which is working number 2. So working 2 receives that credit. So that credit is a minus. Less, sorry, what have I done? I hope I've not lost my document. Oh, it's here. So less that impairment loss on the trade name, which is 14. So recall that the 14 is in Simba's accounts. So I'll go to Simba's accounts because the trade name is in Simba. So the 14 will be in there. And that's why I'll need to allocate to the non-control interest. So this statement, or me putting it there, implies that I'm allocating 20% to the non-control interest. And I can just put it just within that working to say that I'm allocating this 14 to the non-control interest. So allocate 20% to the non-control interest. And that's why I've put it under Simba, so that I take only my 80%. Okay. Okay, fine. So if I come back, I'm done with all the notes. If I double check, because note 9, we completed it some time back. So mean that in this particular case, I'm done with the question, just like I'm done with all the notes. Okay, so if I'm done with this, it's up to you, and the examiner does not demand that complete the balance sheet, but you need to complete the retained earnings. There's no way you'll finish without completing the retained earnings, which was your working 1, is working 2, and also complete the non-control interest. So this is where I need to put my effort to say that let me complete this here at least. Okay, so mean that I'll say 3, 5, 40. I'm starting with the figure for Rafik, this figure here. So 3540 plus 449, then plus 54, then minus 22, then minus 126, then plus 6, then plus 315, and minus 378. Okay, so if there are any of you who have actually done that calculation, perhaps confirm. I want to be sure that the figure I'm having is the same figure you have. So the figure I have is 3838. 3838. Okay, so I'll need to have a column, a line here for subtotals. Subtotals. Okay, so I would want you to complete that, just like also the figures here. Maybe I could even give this to you as homework, because now these totals, nobody is so interested in them. Okay, so let me ask you to kindly complete this, because I'm going to send this to Icpar right now. I don't know whether they will send it to you before we have our session early morning tomorrow. Yes, our session is early morning tomorrow. Why then don't we complete it tomorrow early morning, so that then I save your time, especially now that it's late, you need to rest. It's different from morning where I can have that extra 1 hour if I need. So tomorrow, let's start at 8. Tomorrow, we have another question on consolidations. The question we're going to do with consolidations tomorrow should have, I think I'm picking the one that has disposal. I'll pick one, I'll look for one that has a part disposal, because if I remember, let me just see our timetable here. We arranged consolidation areas. Yes, today we've done piecemeal. Yeah, so tomorrow let me get a partial disposal then in the morning, a partial disposal. But in the first 10 minutes, let's just complete the calculator, which is not even going to be marked on the retained earnings, the non-control interest, and the balance sheet. Then we go to get the principles on a piecemeal or partial disposal. And we look for a question 1, which should also be able to comfortably deal with this, especially looking at just 1 note out of 7 or 8, 9 notes. It's only that note that will be on the part disposal, while the rest of the notes are on other things which you can comfortably in the exam try to attempt. Okay. But before that, let me see if I have a question in the chat. Somebody says, sir, on pension scheme, in case we don't have asset ceiling, what amount we must, that's the problem with people cramming. I told you yesterday, I hope people were at this class yesterday, or you forget in less than a day, yet your exam is in 2 weeks. Yesterday we said that always, in most cases, you're having a net pension liability, but sometimes you'll get a pension asset. If it's a net pension obligation, then don't go for number 7. That one, you don't need it. The others are normal. Your pension assets and pension obligations, you need that table. But that table, you realize that the pension obligations will be bigger than the one we have today. So the one we have today has a pension asset bigger. You're making me now look for what you say. It's this, people miss, I think, sessions, and then they come, and then we have to go back. Yet they will get the recording. Maybe I'll say, wait for the recording if you missed yesterday. So today we have pension asset bigger than pension obligation. It's possible, and most times you'll have pension obligations bigger than pension assets. So this thing here will be called net pension obligation. Net pension obligation, not net pension asset. And you'll have all these transactions, most likely, but you'll not have number 7. So number 7 only comes when you have a net pension asset. So you'll not have this one here. But the others will still be there in figures and in the double entry. So the person who's asking me, then you do what we've done today, apart from asset ceiling adjustment. If I get your question well, sir, on pension scheme, in case we don't have asset ceiling, what amount should we record in the statement of financial position? So we would now record 151. So all the 151 is recoverable. So that's English. The English is that we may not be able to recover all of it. They told you, yes, you can only recover 70%. If they didn't tell you that, then you can recover all the 151. You don't have to reduce it by 45. So you take the 151 in the current assets as the net pension asset. Full stop. So that's how it will be. Okay, fine. So I think let's bring it to a close here. And then let's pick this from tomorrow. Tomorrow, I want to just complete this. If you are able to complete it in your free time between now and tomorrow, well and good. But let's just do the calculator or calculation, which is not marked, and then complete that balance sheet. Then we start on piecemeal disposal or part disposal. One of these two could be the one coming, either part disposal or piecemeal acquisition. Today's piecemeal acquisition, tomorrow morning is piecemeal disposal. Please look at all of them, but one of them is likely to be the one coming. Okay, so let me wish you a good night, and let's pick it from
good night.
Good night too.
Thank you.
You're welcome.